Hamsters, can you imagine that if you had invested 10 years ago a mere $4,000 in Bitcoin, you could have been a millionaire at today's Bitcoin prices? Did I catch your attention? Today we'll be talking about the basics of trading, both in the stock market and in the exciting world of crypto. We'll start with OG trading. Yes, stocks, or as the cool kids say, stonks.
Investing in stocks is a great way to make long-term profits.
Okay, let's go.
Step 1. Education. Don't go into trading blindly. Take a little bit of time to learn. A. How the stock market works. B. Types of investments. Stocks, ETFs, mutual funds. And C. The basic trading strategies. Some other things that might be helpful: a quick rundown of some market technology and how to read stock charts. After that is set up, it's time to set some goals. More specifically, how much money do you want to make? Sounds silly, but trust us. And how much risk are you willing to take? Can you afford to lose it all? There's always a risk. Are you just trying to make a quick buck, or are you ready to take time and build your portfolio? Your answers to those questions will be the baseline for selecting your buys. That's it for the pre-work. Now we get into the weeds a bit. Step 2. Open a brokerage account. How? Choose a reputable online broker. Look at things like fees. You don't want anything more than 1% according to Money Sense. Research tools, how easy it is to use, and is there someone to help you if you get stuck?
Can we continue?
Yes.
Can we continue?
Depending on how novice you are, educational resources or platforms with simulated trading are highly recommended.
Using a trading simulator is one of the best tools you can use to learn to trade, become a better trader, and avoid many of the problems traders develop.
Step 3. Develop a trading plan. Let's put a little strategy behind your buys and sells. You might, and will probably want to, choose between fundamental or technical analysis, set entry and exit points, determine position sizes, and establish risk management rules, e.g. stop-loss orders. Again, if this sounds complex, a good beginner strategy is often to diversify with index funds that represent a larger segment of the market and invest the same amount each month. In theory, this eliminates timing the market and, of course, answers to the statistic that the average individual investor actually underperforms the market index by 1.5% each year. Turns out there is no such thing as easy money. And step 4. Put your money to work. In small amounts. Begin with capital you can afford to lose while gaining experience. Consider safer investments like blue chip stocks, stocks of well-established, profitable companies, or exchange-traded funds, ETFs. A basket of investments like stocks or bonds initially. Once you get the hang of it, you can start being a little more bold. And there you have it, the basics. It's time to switch gears a bit. Or for the hamsters, really changing lanes. Okay, that was a stretch.
Okay.
While there are some similarities between traditional trading and crypto trading, there are definitely differences. Here are the 5 simplish steps to crypto trading. Let's go!
Let's go.
Step 1. Setting up your crypto exchange account. Just like choosing your champion, selecting the right exchange is based on more than one factor. Things to look at. How many coins do they offer? Do they have enough liquidity and service fees? Fees are sometimes listed as low as 0% to 0.075%, depending on how much you want to invest. And of course, the legitimacy of the platform. Is it trustworthy? Can you find enough information to verify? Do you know anything about the team behind that platform? Do they use extra layers of security? Everything is important, since you're trusting this platform with your well-earned money. The other thing you might wonder about is how you can fund your account. Since we are talking cryptos, the ease in which you can get money into your crypto exchange account also plays a part. Step 2. Funding your account. As I'm sure you know, it takes money to make money. Some platforms require minimum deposits. So even if you want to start small, remember it might not be up to you entirely. Time to make some decisions. Step 3. Choosing your cryptocurrency. From Bitcoin to altcoins to meme coins, there's quite a few options out there. The trade-off? Risk. As funny as it might sound, Bitcoin has lower volatility and is a bit more stable than some of the new coins. But when we are talking crypto, the volatility is still high for pretty much any asset compared to traditional financial assets. Oh, as I mentioned, Bitcoin, as well as other established altcoins, might have lower volatility, but meme coins' price might fluctuate as much as 50 or even more % a day. Just remember, with more reward comes more risk. So when in doubt, advisors will often suggest you go for balance. Of course, picking the coins alone isn't enough. You will also want to find that winning strategy. This takes us to step 4. Step 4. Choose your strategy. While some are more complicated, like trading breakouts, others a bit simpler and include a buy and hold or hodl strategy. You might want to choose to buy low and sell high, or you might buy assets to hold them and wait for their all-time high despite the fact that it can take years. Once you've picked your strategy, it's time to execute your trades.
I'm frightened and I don't know what to do. I'm confused and I want to go home.
Let's say you have a natural gift for trading or some beginner's luck and you start turning a profit. Now what? There is one more step in crypto and that's storing your assets. Step 5. Storage. When it comes to the crypto industry, choosing where to store your assets is a very important question. You want to protect your assets and make sure it's safe.
Good morning, my darlings. You're coming home with me.
Well, you can store your assets in the online wallet on the exchange itself. This might not be safe for your millions. The next question you will want to ask is hot or cold, custodial or not. And if you want to better understand the difference and what might be the best choice for you, we already have several videos on this topic. Remember, whether you are storing your assets in a hot wallet for convenience or fortifying them in a cold wallet for maximum security, the risks are still there. And that's a wrap.
Okay.
Thanks for watching. Subscribe and remember, hamsters are power. One for all and all for one. Bye!